Today I'll be calling cable. My name is Wakar Meyer and I'm your Elliott Wave analyst, reviewing what has been and predicting what is likely to be in cable price action. So, I said the second wave was over and and by the way, we're on a 18-hour chart. I said that the second wave was over right here and that this wave down was 5 waves and was one. Well, that wasn't right. But the beautiful thing about Elliott Wave is, although it's not omniscience, you're not going to be right 100% of the time because you have to make choices about what degree a particular structure is. You can be right about the count, in other words, 5 waves or 3 waves, but when you're getting close to a trend reversal, you may be wrong about how you label that. So I chose to label this wave down as one because it was 5 waves. Well, that clearly was not the case, but I also mentioned that it could be C, and we would know that if, the move up took out that point right there where the arrow is, right here. Uh, but I think now the movement is over. So you've got 5 waves up for A, you've got 3 waves for B, and 5 more waves up for C. Now, as you can also see, when it moved down, it did not break the lower band here of the weekly Fibonacci's. And when it moved up, it also did not break the top band. That band is at 55.95 and price topped out at 55.93. So didn't it didn't indicate one way or the other, stayed within what I call the channel, and I think we're likely to see that move is over. Um, and price action should start down. But anyway, like I was saying about Elliott Wave, is it's not omniscience, but it is the best tool available for gauging what a market is going to do, and you know exactly where you're wrong. So not perfect, but pretty much the best there is. And if we use our channeling technique, if we connect the origin of one and the terminus of B, go ahead and extend that right, new parallel, move it up to the terminus of A, you can see that per the Elliott wave principle, the entirety of the correction stayed within a channel. Okay, so if this is indeed over, then the top here at 55.93 will remain the top. The price will start moving down and you'll see it break out of the channel. That'll be a strong indicator that the correction is over. And now if we zoom in to a smaller time frame, I'm going to go from an 18-hour chart to a 9-minute chart. You can see that, there you go, did not break, and it turned around pretty dramatically. You could say this is a 1-2, and that's a third wave, making a fourth wave, going to push down in a fifth wave. I'll give you a quick look at the Dow. I believe that the long-term trend in the Dow that has lasted 4 years moving up is now over. Okay, I think that the Dow is making a large degree triangle that started in the year 2000. I haven't seen Elliott Wave International stuff in a while. I know they were considering that move from 2000 and whatever it was, 2 to 2005 as a B throw over. I was always a bit dubious about that because you could count it as 5 or 3. I think it's turning out to be 5. This move up for 4 years from 2009 to just a few days ago, I think that was the B wave of a running triangle. So I think we're going to get a move down for 3 years or so in the Dow that'll take it between probably, if you want to look at, I've sort of mapped it out here, what I think is going to happen. So I would think that, or I'm thinking that this is A wave, this is B wave. I think it's going to move down for C wave. And I also think that this B wave was the complex wave. You have a 535 to this point, a correction, and then another 535. So that's a double zigzag. I think you'll now see a simple zigzag down to somewhere between 10,000 and maybe 8,600 in the Dow. then you'll see it move up, move down, something like this, and then I think there's going to be an extended period of upward movement in the Dow. It's probably the last 27 years. Anyway, the reason why I'm showing you about the Dow when I'm calling cable is because for a long time they've had a tight correlation. The Dow moves up, the pound moves up, and vice versa. So if that correlation maintains, then that is significant. So I think, once again, I think trading the pound in the short direction is safe. If you would like to do so, there's your top. Or if you are more conservative and you want to wait for more confirmation before making a trade, then going back to the 18-hour chart, you'll wait for a break of the channel. So I think a break of the channel would be strong indication. It'll probably make some sort of correction. That's where you'd want to enter, and then if this top remains the top, that's what you would put as your stop. Also, just a reminder, you can follow me on Twitter at Calling Cable. You can subscribe to this YouTube channel and get an email when there are new postings. That way you'll never miss when it comes out. I'd appreciate it if you do. And that's today's call. I hope you'll join me again for tomorrow's call.